Hello, hello, and welcome to April 13th. Alpha's Adobe at 131%. There it is, 131% for Adobe. We are at last bar low. That's right. Rule number 3 has been initiated. ROI at 100 or greater, last bar low. We are at last bar low. Now, look at this. We are 19 percentage points away from 150% on Adobe. That initiates rule number 4. 150% exit to the high or exit to the low. You're going to have to make a decision there. I'm going to have to make a decision there. The beauty too is we're at $747 on the close at the top of this candle. The O is 1637. We can hold on to $700 plus. We can drop this O down below $1,000. That would be really spectacular. Okay, and that is it for Adobe. So now second in place is coming in with KR at 62%. And KR is right here. And KR, we remember KR did close above the third ratio, but the lower low is right in here. Higher low, lower low, higher low, and it came out to 35.53. We did have a higher low, lower low here, but with the buffer, it made it less than the 35.53. Therefore, rule number 4, exits, do not retreat. Rule number 3, take profit. Rule number 2, protect profit. Rule number 1, protect capital. Rule number 5, rinse and repeat. All right, that said, we'll be seeing we had a drop, which is good. It's in our favor. Now it's a matter of getting the up candle on the right side here, and then we will just stop here to the lower low at 62. Again, we can reach that ROI 100. We'll just go to last bar low and take that money off the table. We are running against an ode of 2142, and we're currently at 362. So it's still just about $1,800 thereabouts if we're able to clear with that 300. Going on to Capri, and Capri is running here. And here is Capri. And Capri, a nice midterm hammer. That is really interesting. We have also divergence. The stochastic is rising, but the RSI is dropping. So when this happens, that means that the market's really indecisive which direction this is going to pull to. We are still way below our third ratio. Our third ratio is, let's see, our close was, this we got to look at. Our close is 52.82. This line here says close 52.82 and 57.95. So it's about $5, a little over $5 away. And the ATR here at Capri is at 2.5. So that's 2 trading days away in a perfect world of trading. All right, so let's review now. The way we're looking for is a 3-to-1 ratio. We're risking $1 to make 3. And as you saw earlier in the rules at Adobe, is that we're looking for close above the third ratio to get the lower low, or take profit off the table at last bar low at ROI 100, or get to that 150. All right, that takes us now to we have 3 leaders left in the field. Walgreen, and Walgreen is. Walgreens third ratio is way up here at the 60. This is when we got real close. We got like within $3 with an ATR of $1.50. That was 2 days away, and then it got pulled back. But you see now we're doing a little flatlining right in here, and that is an indication that the market just might be in accumulation. Now, what is accumulation? Accumulation is that remember, institutions who buy stock, they don't deal much in options, that buy stock will need to buy slowly, because if they went into order, and let's say order 500,000 shares, 500,000 shares of Walgreens, it will pop the price so high that by the time all their orders got filled, they'll be paying for price way up here, and they don't want that. So they come in here slowly. They buy slowly. They watch the price, then they stop buying. Not that the values drops. It's just, remember, price is dependent upon the buyers and the sellers. If there's more buyers, prices go up. If there's no buyers, prices go down. Not necessarily being sold, it's just that no more buyers, therefore there's no more need to push the price up higher. So that's what's happening here. It could be we'll be getting an accumulation. Going on to AT&T. AT&T are here in Los Angeles. It's one of our media companies. Warner Brothers, HBO. So massive pullback. Now here is a good indication that there was a sell-off. This is an accumulation of a sell-off. Look at this drop, $31 down to a close of 29. So that was $2 and something on a 47 ATR. That's 4 days. That's 4 days of sell-off down here. Now we are getting into a nice area here of the stochastic. Remember, stochastics lead, and they get down here into this red line, get into the turnaround zone, and come back up again. Now we do have a good deal of buffer. Remember, we are 3-to-1. We are risking this $1 to get that third dollar up here. So we have all this down here to lose to get down here. Now it would not be a pretty penny. I mean, it will hurt. But the bottom line is that we're sticking to a 1-to-3 ratio, as you can see. It pays off. You have the patience to stick in there and stick to your trading plan, and payoff time comes along. All right, that takes us down to the last one positive, and that's a put. We have a put in the field with Biorim, as a put. And so here's our put. That's not doing the greatest, but it's just wavering along. And here we are anticipating a sell-off. That's what we're looking for on this put. We're looking for a sell-off. That would be. Now we have 1% on an up candle, which is really odd. You don't see that very often, but we got a 1% gain on an up candle. But it's a spinning top, which means the price is really indecisive which direction they want to go. And our target is a 66.26, or get that RI 100 to be able to take the money off the table. Biorim owes us 896. So that's where that's at. Okay, now look also too. The account grew nicely today at 65.41, and let's bring up our trusty calculator. 65.41 minus the 55.33 of the initial start of January 1st. We're ahead $1,000.08. Divide that by the 55.33 as a percentage, and we are 18.2% ahead. Let's go look at our title. There it is, 18.2 versus the SPY of 10.4. Where is the SPY? SPY's right here. There it is, 10.4 on the S&P. Remember, the S&P is your benchmark. It is the 500 companies of the United States. The result is that this is what everybody tries to beat. If you can't beat the benchmark, if you can't beat the SPY, just put your money in the SPY and live with it. And it has an average return, according to past history, it's supposed to have an average return of somewhere around between 11 to 12, 13% for the last 30-something years. But we as traders are looking for more of this action, and that is higher percentage on the returns, pull the money off the table, and build the account and beat the S&P. And with that, we'll conclude today's report for Losers Become Winners with Alpha's ADBE at 131%. And thank you very much for stopping by and checking it out.